If you are balls deep into stocks right now and are confused about the magnitude of this crash and wonder what is going on, you are exactly in the right place. Hi guys, this is Dan from the Investment ABC, and in this video I'm talking about the current state of the overall US stock markets. If you follow me closely, you know that I was predicting this crash last month and called a bigger correction or even the end of the longest bull market in history. All my indicators showed that a correction was imminent. We just needed the pin to prick the bubble. There are two main drivers for this crash. The first one is the coronavirus, and it's fast spreading around the world. The virus is even now spreading in Italy and soon will affect also other European countries, since people can freely travel from one country to the other in Europe. Investors realize how dangerous a longer-term lockdown of major cities are. Companies and also individuals are drowning in debt, and if their daily jobs or businesses are disrupted for a while, they will quickly have problems service their debts. This might lead to a wave of defaults and the beginning of a major recession. This would be the worst case scenario for the stock market in my opinion. The second reason for the decline is the possibility of Bernie Sanders winning against Trump in the election later this year. The more Sanders' chances of winning increases, the more the stock market will decline and put Trump under pressure, because according to him, he made the stock market and economy great again. Now the question is whether we have finished with the correction and resume our bull market, or if this is really a transition from a bull market to a bear market. Many investors I know and follow think that the correction is over and that we go substantially higher from here, but I am not convinced about that. It really depends now whether the virus is getting totally out of control or if we can somehow contain it. A longer period of lockdown will eventually hit earnings of most companies and their production capabilities, and eventually lead to a recession at a time when most central banks are at their limits with decreasing interest rates. The market reminds me of the crash in 2001, where September 11 was the trigger of it, the psychological shock moment, so to speak. No matter how much the central banks are printing, short term, if people are scared and not confident, it won't help the markets. The stock markets are oversold at the moment, so I wouldn't be surprised to see us go sideways between 26,800 and 27,700 for a couple of days in the Dow. After that, if the situation is getting worse, we will most likely see a further decline to 25,000 or 26,000 points. The big investors are worried and fleeing into the bond market currently. That is the reason why yields are dropping like a rock and the yield curve is inverted again. The inversion of the yield curve is a very strong indicator that something is not right in the markets. This virus comes at a good time to blame when the current economic system is collapsing. It is no one's fault, just nature. I do not believe in coincidences. Do you? I hope all of you have some cash on the side to buy some shares of your favorite companies when prices are reaching undervalued territory. Now is the time to analyze companies and have a clue at what price targets you want to buy them. Also, don't forget to prep for the worst case scenario of a lockdown. Have some food, medication, cash and gold and silver at hand. If you like this video, please hit the like button, share, comment and subscribe. Bye guys, and see you in the next one.